And this is now Katie, trade planning with options. Katie's going to share a bullish options trade in crude oil. She will share the analysis that we do and combining cycle analysis with these option strategies using the Tasty Trade platform. And she's going to show you how you can open up an account at Tasty Trade, and we get credit for that, and you're going to get a nice bonus for signing up there. So go to our website. To the top, as Katie shows you, and open up a Tasty Trade account. Katie, show them the work.
This is Katie with askSlim, and this is Trade Planning with Options on September 20th, 2023. Today we're going to look at a trade idea in crude oil futures. First, our legal disclaimer: the options trades that I demo and follow up on are trade ideas. When I talk about closing, adjusting, or managing them, I'm educating around management techniques, best practices, theories around risk management and profit taking, and highlighting aspects of options trading that we encounter as we follow the trade ideas. This disclaimer is specifically related to options trading. For full legal information, please go to the askSlim website or email Matt at askSlim.com. Let's get started. This is the weekly chart of light crude futures, and the first thing I want to call your attention to is this very large 78-bar dominant cycle. It is broken into minor thirds, and those minor thirds are also further broken down into minor half cycles. So these are harmonic families. Now, we likely formed an early low on this first minor third cycle right here 4 weeks ago. However, we are still in the weekly cycle timing window shown by these blue vertical dashed lines, and that is a period of risk. So that is certainly something to be aware of. Now, momentum has been and remains positive with a green reversal scout, our proprietary momentum indicator, this green and purple ribbon on the chart. Notice how it's almost acting like support. Switching over to the daily chart, on this chart we have a 36-bar dominant cycle that is broken into minor halves. Now, we are currently in the minor cycle timing window when we expect a minor cycle low to form and then move up into the rising phase of that second minor half cycle. Notice the extreme positive conditions in here, hardly a downtick. Momentum is positive with both the green reversal scout and also the slim ribbon is positive. It colors the candles red, green, or gray depending on momentum conditions. And as you can see, it has been and remains positive. Now, we did get down into the slim ribbon today. The middle of that acted as support, and now getting a momentum continuation to the upside signal on the slim ribbon PO. We are projecting to that $94 to $95 area in that early to mid-October timeframe. We're going to go over to Tasty Trade. They are our preferred options trading platform. You can hover over the Marketing Partners tab and click on Tasty Trade on the askSlim homepage. That will take you to a page where you can open an account with them. Doing so through our link helps you with some special bonuses and also helps us. Let's now switch over to Tasty Trade. I have crude oil futures loaded in here. Symbol is /CL. The IV rank is 13.8 with implied volatilities in these expiration cycles generally in the 30s. This IV makes both short and long premium trade ideas appropriate in here. I'm going to set up a bullish long premium trade idea, and I'm going to use the October 9th expiration cycle because that aligns with the time period when we expect crude oil futures to have made a second minor as well as a dominant cycle peak. Now, I'm going to demonstrate a call debit spread. That's a bullish trade. To set it up, we buy an in-the-money call. Let's buy that 90 call. And then we're going to sell an out-of-the-money call to reduce our cost basis. Let's sell the 91 call. So this is a $1 wide call debit spread, but the notional on crude oil futures is 1,000. So a $1 wide debit spread is actually worth $1,000. We are paying a debit of 50 cents multiplied by 1,000. It's $500. That is our max loss. And max profit is the difference between what the spread is worth and the debit paid. So in this case, $1,000 spread minus $500 is also $500. So max profit 500, max loss 500, and that's also our capital requirement to place the trade. Now let's take a look at the risk graph. Our profit zone is in green, our loss zone is in red. Where crude oil is trading right now is shown on Tasty Trade by this small red flag. So what we want is for crude oil futures to move up from the current price. That is our options trade idea today. We will follow up on this trade idea next week. As always, please feel free to reach out on Discord or via email to katie@askSlim.com if you have any questions or feedback.
Love it, Katie. Absolutely great.